Hello, grads of FinLearn Academy and fellow traders. Let's do our weekly recap on the broad indices of the markets and let's see what to expect next week. See, if we see Nifty, the 200-day moving average is way below. And one thing is that let me plot the 200-day moving average. The 200-day moving average is around 17,100 levels, and Nifty is maintaining above the 200-day moving average, which is a positive sign. And let's not forget the channel which we are following for the last several weeks. So I connect both the highs. So this becomes the logical target for the market on the upside. Once it touched the channel on the upside and there was a reaction, and this reaction was a corrective decline. Why? Because it just went into the gap area, and again on Friday we had a positive close. So again market is trying to test the channel around 18,000 levels. A breakout above 18,000 levels will be positive for the markets, and markets will then go to test the all-time high around 18,250. What we are seeing is going forward in the next week is this corrective decline is over. Prices filled the gap around this level and closed on a strong note. Right? But having said that, the channel high for the week and the high from the swing high are going to act as a very strong resistance for the markets. So markets are positive. They are buys on dips and declines. The fact that we are sustaining above the 200-day moving average. So we will consider any declines or correction as a corrective decline and the opportunity to create long positions. And on the upside, we can expect a retest of the recent swing high around 18,000 level or into this resistance around 18,200. So still, market is positive, but we don't see any runaway move from here on. Next week, we can see 200, 300 points up move in the markets. So for the near term, we can see Nifty trading in between the 200-day moving average and swing high resistance around 18,200 levels. So that's the range for the markets, and the bias is positive. And in the last week, we said for momentum traders, uh, the candle low before the gap is your support or a stop loss. So it worked that way. Market filled the gap and it is recovered. So momentum traders have to keep a stop here. Swing traders, the stop loss will be below the 200-day moving average. So going forward, the bias is positive. Expect retest of the last high or break above this and test of the resistance around 18,100 odd levels. So now let's go and analyze Bank Nifty on the same parameters. So Bank Nifty also like Nifty. If you see it, we had a big move which was aided by a strong move in HDFC Bank, which has a very big weightage on Nifty. So Bank Nifty is maintaining above the 200-day moving average. See, once we have an indices or a stock which are above the 200-day moving average, we consider is as a positive sign. So for short-term traders, we are into a buy mode. The fact that we are above the 200-day, we gapped up strongly. So Bank Nifty will make an attempt to reach the highs around this level, which is approximately around 39,500. It may happen next week, may not happen. I'm not talking about next week, from here on. So if you ask me what is the direction for the Bank Nifty, it is the 200-day as a support and the resistance from this high. So 200 days 36,700 odd levels. And Bank Nifty also like Nifty filled this gap, if you notice here, and from there it has moved up. So till this gap and the 200-day create a support band around that. So till the gap and the 200-day is holding firm for the bank Nifty, any decline is a buying opportunity. Risk management levels should be below the 200-day moving average. And now let me remove and mark the channel on the bank Nifty. If I take this high, see both Nifty and Bank Nifty, what they did is Nifty tested resistance, but Bank Nifty did whipsaw above the average for a day, again came back within the channel. So break of this channel will signal strong momentum on the upside. When I say strong, it's for swing traders. You expect that 500,000 points move in Bank Nifty. So this channel is upper end of the channel. Market is trying to break out above it. Any close above the channel, take a note of it and have a bullish stance, and we can expect a test of higher levels in a trending move towards 39,500 levels. So for Bank Nifty, the gap and the 200-day moving average are the support levels to buy the dips and the declines. So short-term traders, both for the indices uh, and for Bank Nifty specifically, your risk management levels are below the 200-day moving average, and markets are buy on dips and buy on declines. So going forward, the bias is positive. Any knee-jerk reaction or intra-week decline towards the 200 average, or further declines in Nifty towards the gap, is a corrective decline, an opportunity to create longs with a defined stop loss, which I have mentioned in this series of the video. For the Bank Nifty, it is the 200-day moving average, and for Nifty, it is the low of the candle before this gap. See, the gap was filled. So, for momentum traders, 17,400 is your risk management levels, and for Bank Nifty, it is the 200-day moving average. So, on that note, thanks, friends, and have a nice week ahead.